The new budget has created a lot of confusion among direct taxpayers. To clear the misconceptions, we have Ms. Vidya Bala, founding partner and head research and product at Prime Investor. Hello, Vidya. Thank you for speaking to the Federal.
Hi, Shreyas. Thank you for having me in your show.
It's a pleasure. Vidya, my first question is, why does the government want to make the new tax regime the default one? Is it really necessary?
All right. So, perhaps we need to understand what the default rate really means. The default rate means that if one does not choose, you automatically stay with the new tax regime. That's all that it means. So there is right now no force or no mandate for individuals to choose the new tax regime. The reason, to answer your question on why the government has made it the default, rate, the new tax regime slab rates as the default rate is simply because it is a no frills, plain tax rate, simplified, all the deductions stripped out of the old tax regime and a very simplified form. So it makes a taxpayer's life easy, especially when he or she is just starting out to earn and pay taxes. There aren't that many deductions in any way. So to that extent, it being the default tax regime does make sense to a lot of extent. And there is no hard and fast rule until your time of filing to even stick to it. You can choose the old tax regime, and each and every year, if you're an individual who's a salaried individual, you have the option to really go back and forth between the two of the options.
Vidya, one question that's on everyone's mind is that the government has reduced the number of income tax slabs, let's say from 7 to 5, and raised the rebate under Section 87A to rupees 7 lakhs. So roughly, how many taxpayers will benefit from this move?
Okay, so this is a little bit of a tricky reading of this. So the government choosing to reduce the number of slab is only under the new tax regime, right? And while we don't know the numbers, those who have adopted themselves to the new tax regime is clearly very low. And that is why the government is pushing people to go for the new tax regime in one sense through these nudges, right? So the change in the rebate, the rationalization or the reduction of the number of slabs have all happened only in the new tax slab, right? New tax regime. So if you go to the old tax regime, nothing changes. There is no increase in rebate, that remains the same. There is no change in the number of slabs, it still remains, 0 to 2.5 lakh, 2.5 lakh, and all of those. So there is no change. The incentives or the SOPs, as you might want to, call it, is being provided in the new tax regime. For example, the 7 lakh, so anybody with 7 lakh of income, by default, their choice has to be new tax regime, right? You don't even have to choose between the two, because it's 7 lakh, up to 7 lakhs, there is no tax. So automatically, you don't have to break your head. You can simply choose the new tax regime. I think this will increase possibly the adoption to new tax regime, because we do know that very few people, adopted the new tax regime.
Yeah, Ms. Vidya, it's a very simple question. The new tax regime that's coming now, let's say this is just for our viewers. Now, all of this will come into play only starting the 1st of April, isn't it? That's for the next financial year. Or is it for the one that we're going to? Because this financial year will end on the 31st of March. So all of us are any which ways will have to follow the old regime. And it's only from the next year that we fall under the new regime if we opt for it, isn't it?
So, Shreyas, the new tax regime has been in force since 2020. Right. Okay. So even in the past 2 years, people had the option to choose between the old and the new tax regime. Very few people were aware of it, because most people would have some deduction or other. Their employers would automatically put them under the old tax regime.
Okay.
Right. So, for example, if you had a PF or or tax saving fund or a tax saving FD, naturally you claim deduction for it, or you claim deduction for, say, HRA, as simple as that. Then you fall under the old tax regime. So that's how it used to be. So this was already in force. the changes that this budget has proposed now in terms of reduction in slab rates, introduction of standard deduction, increase in the rebate, all of those in the new tax regime comes into effect from 1st April 2023 for the financial year 2023-24, right? So it's only the changes. So even now for the year ending March 2023, you will be filing your tax returns, say July or so. You could still go for the new tax regime, which is already in force.
All right. Ma'am, our viewers would like some clarity on savings under the new and the old tax regimes. Can you give me an example in terms of savings, both in the case of old and new tax regimes for, let's say, 7 lakhs?
Right. See, up to 7 lakhs, like I said, you don't really need to save, because under the new tax regime, you will automatically not be, charged any tax, right? So let's suppose you're slightly higher than that. And so the question of, whether to go for the old tax regime or the new tax regime would come into force. Now, the quantum of your savings and the nature of your savings will essentially determine whether you want to fall into the old tax regime or the new tax regime. If we take an investor who, has HRA or a home loan interest, or, ATC deductions like your PPF or your ELSS and so on, naturally these will have, for income earner of over 7 lakhs, these will reduce their total taxable income, and therefore the old tax regime will still be beneficial for them, right? But the important distinction to make here is, under the new tax regime, no kind of savings will be entertained by the tax saver. You are already given a higher slab, right? Up to 7 lakhs, no tax. So that itself is an incentive. And, you are basically the slabs that are there are a lot more, kind of graded, where the rates are not sharp in terms of the increase. I'll just give you an, kind of an example. The proposed new tax regime, for example, between 5 and 10 lakhs in the old tax regime, your slab rate becomes 20%, right? But if you are in the new tax regime, even up to 10 lakhs, your slab rate will come at 15% maximum. So it's already giving you benefits by way of lower taxes and a higher rebate level. So this is about it. There are no deductions in terms of savings that will be allowed under the new tax regime. So essentially, you don't need to save for tax purpose under the new tax regime.
Ms. Vidya, now assuming one earns an income of rupees 15 lakhs per annum, will the tax be computed for only rupees 8 lakhs? How does that work?
No. So if somebody earns 15 lakhs per annum under the new tax regime, there is only a standard deduction available of on your salary, if that is a salaried income of 50,000. Once I remove that, the rest of it becomes taxable based on the slab. And what is the slab that we have in the proposed new tax regime? So the up to 3 lakhs. So let's suppose this 15 lakhs becomes 14.5 after my standard deduction. Up to, in this 14.5, up to 3 lakhs will not suffer anything. Next 3 to 6 lakhs, which is next 3 lakhs will suffer 5%. Then 6 to 9 lakhs, the next 3 lakhs will suffer 10%, and so on. So that is how it will be taxed. Whereas under the old tax regime, from this 15 lakhs, you enjoy a standard deduction of 50,000. And for example, if you had made the entire ATC deduction of 1.5 lakhs, that will be deducted. If you had your medical insurance of, say, a maximum of 25,000 under ATD, that will also be deducted. So naturally, your taxable income, if you are having either tax savings or ATC deductions by way of insurance or home loan, your taxable income will come down significantly. I'll just give this example for, somebody like 10 lakh income earner, just to make it a simple thing, because a 10 lakh is a more simple one. Let me just, give you the numbers for those. So if somebody is just having 10 lakhs with the proposed, slabs, the new tax regime, they will be paying 54,600, including cess, right? And supposing somebody is opting for the same 10 lakh earner is opting, say, for the old tax regime, and he or she is claiming 1.5 lakh ATC, claiming 25,000 ATD, and maximum HRA, which is 15,000 per month, your tax under the old tax regime will be just 32,760 as opposed to 54,600 under the new tax regime. So clearly, if you have deductions, the old tax regime will benefit any person who is saving or paying a home loan.
So this leads me to another question. So I can still avail tax benefits under either, depending on whether I'm doing my savings, whether a person is in a savings under ATC, ATT. So he can avail tax benefits under the new regime, or he can opt to go for the old one, isn't it?
No, he cannot. If he is already doing his ATC, ATD, it makes sense for him to stick to the old regime.
Correct.
Because the new regime does not give him any benefits. But there are new sets of income earners, youngsters who are coming into the market who don't have a home loan or who are not already doing ATC or ATD. They can simply fit into the new tax regime. It makes a lot more sense for them. But there is one point that I'd like to make here, Shreyas, that when people take their investment and savings decision merely based on tax, it could turn out to be risky in future when they make such decisions. For example, if somebody wants to buy a second house merely for the sake of saving taxes, you do not know whether that will be available for you 10 years down the line. The very fact that there is something called old tax regime and a new tax regime is very suggestive that this is a transition phase that we may be going through, right? So making decisions only for tax purposes would really have to be re-looked at henceforth. You have to make investment decisions for investment sake, for superior returns and, building corpus. That is definitely there. But merely for the sake of, many people would have, for example, taken very poor insurance products just to save taxes. They would have been sold products that are totally unsuitable for them just to save taxes. Now, those kind of things, will be curbed over time, definitely, and they may go away once, this kind of a transition happens also. So that's something that investors need to keep in mind.
Vidya, what will be the savings for the higher brackets? I mean, what is your broad tax advice for this category, for people who are earning more than 15 lakhs?
Yeah, clearly most of them would have higher investment and savings available. I think as long as the old tax regime is available, they can continue to avail the benefit under the old tax regime, especially if they have a home loan, etc. Most people, above the 15 lakh would likely have availed a home loan and would be owning a house, etc. So that would be the default option. But if somebody is earning over 15 lakhs and does not have any home loan commitments, etc., then instead of simply saving in tax saving products, such as insurance or ELSS, I think this is a good time for them to kind of leapfrog into superior products that may not be tax saving but may yield higher returns. For example, there are equity funds, there are stocks, etc., that can give superior returns in the long run. And although they may not provide the deduction under ATC, they are very tax efficient in the sense they are taxed very low, right? So this may be a good time to actually deploy your money into better earning options. And this could be a good trigger. Moving to the new tax regime essentially means you don't have to just look at ATC. You will simply start looking at superior ways of deploying your money. So that's something that, it's a new way of looking at it. You don't want the government to be telling you where to invest, to build your money. Rather, if there are better avenues to build wealth, you should be choosing those. And adopting the new tax regime would be a good way to do it, in my view.
Vidya, going by whatever I've heard so far, the new, the new policy appears to be tilting in favor of, in favor of the new tax regime. So, do you see any point in investing in PPF or NPS, etc., should the salaried class, at least the young ones, put more money in equity and other instruments? Is that what you're trying to suggest?
Not necessarily. I mean, we never suggest putting all money in one basket. So I think if somebody viewed PPF as a tax saving instrument, they should now view it as a diversification option to their portfolio, as a hedge to their portfolio, because it's a fixed income, sovereign guaranteed product, right? So it still has a place in your portfolio as part of the debt component of the portfolio. Let us suppose your portfolio has equity and debt and gold. There is no reason why it should not be the debt component of your portfolio, for the simple reason it is no less than a bank FD in terms of the return that it gives, right? And many a time it is, oftentimes it is higher than a bank FD also. And as long as the product per se is not going to be taxed, unless the government very explicitly says these government products are going to be taxed, you could still go ahead and be investing in it. The corpus, I mean the maturity proceeds, I mean, you could still go ahead and be investing in it, viewing it as a diversification option. And it's a good step for any young investor to start with low risk and simple products like PPF, and then move on to mutual funds, ETFs, stocks, and so on. That's a very natural progression. All I'm saying is that ATC need not be a hindrance in terms of making that natural progression. You could now really look at proper financial planning and asset allocation rather than simply planning for taxes.
My next question is for potential home buyers. Considering there are tax breaks when you take a home loan, should they stick to the old tax regime or perhaps rethink a home loan?
Yeah, if they already have one, obviously they should stick to the old tax regime. But if they merely are investing, and if somebody wants to buy a home property to own it, to live in it, that's not so much of a financial decision. That's a more, personal decision which they are free to take. But there are many such decisions taken merely by way of tax considerations, that is to reduce your cash outflow from taxes. That needs to be, viewed carefully. Don't be surprised, whichever government there is. You could well have this entire old tax regime moving away and having very little to no deductions. It is my personal view that barring perhaps any kind of clear retirement savings and possibly healthcare related, expenditure, the government may not be willing to give SOPs for the rest of it. Even globally, if you take, these are the only two areas where any government focuses on, right? It's not the government's job to manage our personal finances and cash flows. So directionally, we appear to be headed there. And so if you're taking such decisions merely for tax considerations, you really need to weigh them carefully.
Vidya, can you please explain the change in surcharge for high income groups? I mean, from what level this applies and what is the proposed change?
So the surcharge per se, it kicks in with income slabs of over 50 lakh. Currently, 50 lakhs to 5 crore, there is no change in the surcharge. It remains the same as it was earlier, 10%, 15%, and 25%. Greater than 5 crore is where, the surcharge has been brought down under the new tax regime. Please remember, it's not under the old tax regime, from 37% to 25%. So, with this, the highest tax in the, and that an individual would pay in the country is coming down from an average of about 42% to, 39%. And this is something that in my view, has minimal impact on anybody really, because at that level, it's a marginal decrease is not going to make much difference either to the government's kitty nor to the uber rich's portfolio.
Behind reasons portfolio. All right. Vidya, my last question to you, and I'm going to let you out of this. Apart from income tax, what does the 2023 budget hold in terms of personal finance? Are there newer, smarter saving options?
Right. So there are a few great moves that have been made in this budget. One being the senior citizen savings scheme, where the maximum limit for investment allowed was 15 lakhs per head. has been increased to 30 lakhs.
30.
Now, this is a big, kind of a life-giving threat for senior citizens, because CSS is one of the few options which gives high returns over a longer period, because there's a lock-in. Every time you buy them, you retain that rate. And currently at 8%, the new rates, it is extremely attractive for senior citizens to kind of enter this product. And any person above 60 with a high corpus after retirement CSS can be their first choice in terms of investing. The other thing is the post office monthly income scheme. That's a simple plan where the limit was only 4.5 lakhs. That has moved to 9 lakhs now. So these two products are essentially, the middle class common man products, and I think that's been given a big fillip. And of course, there is also a product, 2-year kind of a product for women, a deposit product primarily for women at 7.5%. That is also an attractive one that has been given. So these are the primary positive moves, right? There is also at least one such big negative move that has happened, which is ultimately may turn out to be good for investors, which is the insurance product. What was called as the guaranteed income plans, and money back, or any such product where you used to get the money from the insurance policy while you are alive, not on death. So if you get such money from the policy, so far it was not taxable, right? This insurance has proposed that if the premium on such products is more than 5 lakhs per annum, then the maturity that you get will be taxable. So this again may not hurt, these smaller products where the insurance premium is 1 lakh or 75,000 and so on. But many of these guaranteed income plans had high premium because they were guaranteeing high income from those products, and that was entirely not taxable. Now the government has plugged that loophole by saying if your premium is very high at over 5 lakhs, you definitely, the corpus, when it comes to you other than through death, while you're alive, you get the corpus, you are going to be taxed.
Okay.
So those are the major ones. Yeah.
All right, Vidya, that was quite interesting, and thank you for simplifying it for us. Thank you for talking to the Federal.
Subscribe to the Federal's YouTube page for more news and updates.